And welcome to the fourth meeting in 2014 of the Finance Committee of the Scottish Parliament. Could I please remind all those present to turn off any mobile phones, tablets, electronic devices, etc. First, before I do anything else, I'd like to formally welcome Professor Gavin McEwen to the committee. Gavin has been with us for a couple of informal sessions, but this is his first public session, so I'm sure he'll be a tremendous asset to the committee and its deliberations in the weeks and months ahead. Our first item of business this morning is to decide whether to take item 3 in private. Are members agreed? Members have indicated their agreement. Our second item of business today is to take evidence from Professor Sir James Mirrlees as part of our Stage 1 consideration of the Revenue Scotland and Tax Powers Bill. I'd like to welcome Sir James to the meeting and invite him to make a short opening statement. Professor Mirrlees.
Thank you very much. Pleasure to be here and very interesting. I wrote quite a short piece of evidence, and I realised in reading it through again that I promised to refer to the Fiscal Commission Working Group later in what I said, but I didn't actually. And I thought it was a good point to begin, because we used rather different terms from the Adam Smith 4 names. The FCWG said they thought good criteria for taxation were simplicity, stability, neutrality, and flexibility. Actually, we didn't make any mention of progressive taxation, but we were certainly in favour of that, if anyone had wanted to ask. And I think there's an interesting contrast between them. I do think Adam Smith was right to put a lot of emphasis on certainty, which is the first thing I thought about. I mean, in setting up a tax system, in effect, which is, of course, in many ways very like the UK's existing tax system, then I think that achieves a fair degree of certainty in various ways, because it's probably a good thing that people should expect that tax will continue to be administered in a rather similar way to the way that they've been used to. Changes can be made, but this ideal of certainty, enabling people to make their decisions with a good sense of whether or not they're going to be paying taxes on particular transactions is clearly very important to achieve, and it's achieved partly by people being used to practices already. As an academic economist, I've been intrigued by the way that tax rates generally don't change very much from one party to another. Of course, I think that the difference between a 40% tax rate and a 50% tax rate is actually not a very large difference. And it's as though there's an implicit agreement that you shouldn't change too rapidly. Now, that's something that's clearly rather difficult to get into legislation. It has to be some kind of understanding. So you probably gathered from the tone of my evidence that I thought, on the one hand, that the bill doesn't achieve a lot of certainty for what the taxes will be and how they will apply, but that it was quite right not to do so, because it's probably not something that can be achieved by direct legislation. I think this difference between the framework which is set up in the bill that will become an act and the exact numbers that describe the tax rates and penalties being set by regulation makes a lot of sense. So that was the first point that I made in my submission. because there are other things, and I assume that you don't want me to effectively read my evidence again, since I know it's been circulated.
I mean, we've all got copies of your evidence, but if there's anything you want to accentuate or anything you want to add to it, then we'd be more than happy for you to do so.
Yep. I think I wanted to point out that in talking about the convenience of taxing, that I didn't give sufficient credit to the plan to do a great deal of digital entry of information, something like these property transactions, which is a tremendous advance in the simplicity of paying taxes, which I think most people I know greatly appreciate now, and that's intended as part of the whole system. And I hadn't mentioned that in my point 6, where I was talking about are there ways of increasing the convenience, and the particular rather simple thing I mentioned about how rapidly people can complete it. Maybe something that's a bit harder to do if you're thinking of digital entry, partly because that's often something people do several times. Mm-hmm. So that point, it seemed to me on reflection, may not be so relevant to the 2 particular devolved taxes that you're considering. So I just wanted to extend that slightly. And I thought I would underline that neutrality, which is one of the things that the Fiscal Commission Working Group put a lot of emphasis on, and which in the Merrill's Review of Taxation we also put a lot of emphasis on, is certainly a desirable feature. And exactly what it means seems to vary a lot from one tax rate to another. But it seems to be something that, again, you can't handle by very general legislation. And it would really be something to consider when you were talking about more specific taxes like the property tax, the transactions tax, and so on. So I think I won't say any more at the moment.
Okay, that's fine. I mean, what usually happens at Finance Committee is that I will ask some opening questions just to kick us off, and then I'll allow colleagues from the committee to then come in with their own questions. Some have already indicated that they want to come in quite early. First thing I'd like to ask you, Professor Merrill's, is with regard to the general anti-avoidance rule. We've had some informal sessions with a number of organisations, and they have, in each of their kind of papers that they've kind of given us on an informal basis, this is an issue which has been highlighted to them. So I'm just, you say that you have sympathies very much with this measure, but you see possible difficulties. For example, in paragraph 58 of the bill, where one of the criteria is that, and I quote, obtaining a tax advantage is the main purpose, or one of the main purposes of the arrangement. I mean, one of the things, of course, that galls many members of the public is, of course, tax avoidance, and so obviously we want to ensure the legislation is fairly robust in this direction. But I wonder if you can expand a wee bit on your thoughts with regard to this particular issue.
Yeah. So I took the particular example because I thought that in the case of property tax or a property transaction tax, that if you didn't have proportional taxation of the value of the sale, that there was clearly an incentive to split the sale into parts, each of which would attract the lowest possible proportional tax. And I've never, in my very limited experience of these transactions, I've never come across that being done. It obviously can't very easily be done for a dwelling house, for example, in Britain. But the incentive to do that is very great when you, in the UK currently, could switch from 1% to 4% of the value. if you go across the threshold. So clearly an arrangement where you pay separate checks for different parts of the property, and it's all simultaneous, is something that you want to rule out as being clear avoidance. So no difficulty about that. But then I thought that there could indeed be good practical reasons why somebody would gradually buy different parts of a property, which might be a lot of houses in some area. So there the difficulty is, how should you be defining the plot? And if you say that just one of the purposes is to reduce taxation, and of course that would very frequently be the case when you're thinking of alternative ways of doing something, you would, without being too artificial about it, you would naturally keep the tax low. You wouldn't do artificial things that would increase your tax, for example. So I thought there was a difficulty about drawing a line, and if you said that if just one of the purposes was to reduce the tax, and the other entirely reasonable ones, such as not being able to borrow enough money to buy the whole site straight away, so that you'd have to wait several years before you could do the rest of it, that would be a perfectly legitimate reason, and we probably don't want to apply it. It all arises from the somewhat unreasonable structure of a tax. It is not proportional. Of course, I started by mentioning something that isn't one of the taxes that is explicitly under consideration, which is duty-free. I was thinking of the well-known case of people taking a van across to France and filling it with wine and bringing it back, which currently, if that's a year's consumption for the family, is regarded as being perfectly legitimate. That seems to be clearly a case where it would breach this rule if we were talking about that particular set of taxes, because one of the main purposes of arranging things this way and making a short trip and filling up the van is to reduce the tax that you pay. Now, I suppose that is an extreme case, which is probably that they've allowed too much. But it seems to me that we're talking about areas where there should be explicit legislation or regulation as to when you should pay tax, rather than things that just might be caught up in a general rule of this kind. So it struck me as too strong.
And you've said that it's reasonable to have progressive taxes on income, at least in the upper ranges, but not on property transactions. Why do you take that view? I mean, I would take that someone selling a house at £100,000 would therefore pay the same kind of transaction fees. Someone selling a house for £1 million, a lot of people might think that's not necessarily fair. From a taxation point of view, I wonder if you can tell us your thinking on that.
No, I was certainly meaning that the tax paid should be proportional to to the value.
Right, okay, because it just said it's reasonable to have progressive tax on income, at least in upper range, but not on property transactions, so perhaps I've not interpreted that.
So when I said a progressive tax, I was thinking of one where the rate of tax increases.
Oh, right, so it's the same proportion.
As you go up more, the way it does for the income tax.
That's fine, because under LBTT that's going to happen anyway. We've already got that into the system whereby it will be, as you suggest it should be.
Oh, it's actually proportional.
Yes,
that's
the intention. Okay, so apologies for that.
Oh, that's an excellent
To get rid of
step
slabs,
forward.
to get rid of slabs and stuff like that. Yes,
Yes.
indeed. Now, you talked in your paper, and you also mentioned in your introduction about talking about thinking of conveniences that could be imposed on the tax agency. I'm just wondering if you could talk to us a wee bit more about that in reference to this bill, how it could perhaps work with in relation to this particular bill that's being proposed.
Certainly, I take it that most of the items that come under the two taxes, which ought to be relatively simple to report, so that perhaps it's hard to imagine the convenience problems. So I was really thinking more of what was going to happen when there are other taxes devolved, or when presumably the same principles would apply.
Okay.
I didn't know when legislation would have a chance to have requirements about the nature of tax returns, and so that there's a very clear incentive to be very convenient for the taxpayer, quick and easy to do. I think in some ways this bill is actually increasing convenience because of having a more uniform set of rules about how long you keep relevant information, which broadly speaking 5 years throughout. And that seems to be a bit simpler than current UK legislation. So that would be an example of where you would want convenience. I actually wondered whether one could change that at all, but it's clear that records can nowadays be on computers, and then in a sense can last forever, or at least until the hard disk dies.
Lasts a lot longer than us, that's for sure.
So one might actually increase convenience by saying that you should always keep your records.
Okay. Paragraph 13, you've said it is sensible to determine tax rates and penalties by regulation rather than stating in the Act. I mean, I've got a lot of sympathy for that. I've never understood why legislation has specific financial penalties in them, given the fact that inflation erodes them almost from the first day, you know, a bill is enacted.
Yes,
so I take that on board, and I'm sure colleagues do also. But I'm just wondering if there's any other parts of the bill that you think could be improved. Or if there's any other areas that you think, you know, have perhaps should be taken from the bill, so to speak, you know, are superfluous to the good workings of the bill.
No, as I indicated towards the end, well, perhaps I could be more explicit. I was surprised that I had so few ideas about how it could be improved in that respect, because it seems to have been very carefully so arranged that actual numbers are combed out of the bill and left to regulation, and that seems to be entirely sensible. I don't know how regulations are handled in the Scottish Parliament. They're presumably laid before the House and can always be discussed at some particular time. And it's clearly important that they should always be discussable in Parliament. But whether they should be discussable before they become effective, that doesn't sound quite right, because it would be natural for a budget to announce a number of tax increases which would come into effect immediately or the next morning. And as I understand it, that's allowed for in the bill.
Okay. I'm going to open up the session now, Professor Mirrlees, to colleagues, and the first person to ask questions will be Jamie, to be followed by Michael.
Very much, Convener, and the Convener raised the issue of avoidance with you, Professor Murlees, and that's where I want to go first of all as well. And obviously in paragraphs 10 and 11 of your paper, you raised the issue of the anti-avoidance rule. You commented and you say you're sympathetic with it. You obviously talk about maybe some of the unintended consequences. But I suppose it raises a question, and I'd also accept you say you're not necessarily a legal expert in terms of these matters. But I suppose it raises a question, do you think the current system does enough in terms of tackling anti-avoidance, bearing in mind the Convener's, I think, fair point that it is an issue that irks the public, and is there good practice in other jurisdictions out with the United Kingdom, for instance? What more could we do in terms of anti-avoidance?
This is an area where I'm not terribly well informed, but it does seem to me that the fact that current practice in the UK is for schemes to be devised and discussed with the Inland Revenue to see whether they are acceptable methods of tax reduction or tax avoidance. And many of these schemes are accepted quite usually on the grounds that they are they have some rationale besides simply trying to escape tax entirely. But it almost seems that, as though you want to say, if a tax lawyer comes along with a proposal for an avoidance measure, then that means it is an avoidance measure, and you would like to stop it. And I know that the Inland Revenue constantly has a problem of deciding what it is. You know, of course, that they have it really has to be pretty abusive of the system before it can be ruled out under the legislation. That seems clearly too weak. In fact, you would expect to have the same thing happening under Scottish tax arrangements. So I think that the question is how can one find good reasons for ruling these out?
One of the things our advisor has suggested could be a possibility would be some form of general purpose clause where the bill would say that no one should act in a way that's inconsistent with the intention of Parliament, and that might allow the tax authority to interpret what the intention of Parliament was, and indeed if it becomes a matter for the courts, and then perhaps they could look at, for example, what the relevant minister has said in Parliament, what the intention of the bill is. Do you think that's something that's worth exploration?
Yeah, well, I wondered when I was looking at it whether one wouldn't naturally have said that you want to rule out arrangements whose primary purpose, I mean, it's something slightly weaker than main, but meaning it's the not an overriding purpose, is the avoidance. And exactly in the spirit of what you're saying, that it then should be a matter of judgment, whether the scheme can be ruled out, yes.
Helpful, thank you. You also talk about Revenue Scotland acquiring potentially larger and wider responsibilities, and that's in the context of either a yes vote or the further devolution of taxes. So clearly there's the potential for Revenue Scotland to become a tax body with dealing with a more substantial amount of array of taxes. Indeed, it could become the tax collection authority for Scotland. So I suppose in that context, how do you think it could improve on HMRC's approach, and is there any possibility of building in some form of advantage for Scotland here?
I think the improvement would have to be by being more rigorous, perhaps on the lines that you're speaking of. The judgment would be whether the rest of what is in the bill speaks of the overall intention, and that it has to be judged in the context of the whole legislation. And this makes a lot of sense, but it means that in the end it's going to go to the courts, or our kind of court, to build up case law gradually. I think it's a very interesting question whether we've perhaps got quite a long way to that already in the UK, in that I think that the opportunities for tax avoidance are thought to be becoming harder. The big things that it's hard to know exactly how you can tackle it is when companies are able to divert their profits to foreign jurisdictions, like Microsoft having all its patent royalties in Ireland, or whatever. There are lots of examples, particularly in company taxation, which would be a big area for all of this. Of course, this is supposed to be handled by pricing, by insisting that the accounts should be worked out with appropriate prices for everything. This seems to be a very difficult thing to achieve properly. So that may be one area where, in due course, you would expect to be legislating. But
to take you back to the first comment you made in response to the question, you say that Revenue Scotland could act with greater rigour than HMRC. And I think I picked up, I'm going to ask the question, but I think I picked up saying, are you essentially saying that the bill as devised, has been laid before Parliament, essentially builds in that greater rigour?
Oh yes. Oh, this is a very rigorous one. I was fearful it had gone slightly too far in the direction of leaving things general when there should have been quite specific legislation by Parliament, or at least regulation, that says that, for example, in this case of splitting the purchase, which turns out not actually to matter under the current tax schedule for the property tax, that in that case I think it would have been quite... My fear was that it was going to cover things that were really entirely reasonable, because there was quite a long delay between the purchasing the different parts. So I thought the existing one was tough, and bringing in the general intention of the legislation seems a very good thing. Yeah.
Okay, and one final question, if I may. Convener, I know you've produced a report into the UK taxation system. I must confess I've not read it in great detail myself, but I wonder if you could, sort of, in your view, has it particularly been acted on, and even in the context of the limited array of taxes we're dealing with through the scope of this bill, although bearing in mind that it could be an institution that we're creating that deals with a wider array of taxes. What are the key points from that report that we could address here? Are there lessons for us establishing Revenue Scotland as much for HMRC out of your report?
The items of tax change that generally catch attention, or in particular that are reported as far away as Hong Kong, where I live these days, are things like tax rates and top incomes, or whatever, which we didn't really comment on because we were trying to find ways of making the tax system more efficient within an overall kind of progressive structure, equality. So if I were to pick out what we thought of as important general principles, one would have been that other than what would usually be called income from, say, pay and interest on investments, but leaving these aside, that you should have pretty much a uniform rate of tax on lots of things. In other words, for example, that VAT should apply to everything. That's a difficult thing to make work because of things like financial services and the enjoyment of property, which are difficult things to measure properly for this purpose, but leave aside the technical details. That's an area where there seems to have been no change, and I believe it indeed would be politically difficult. And another area would be things like property taxes, where I suppose the best example so far of moving towards what we were recommending, which was effectively a proportional tax on value to replace the current council tax. That the transaction tax you have would, or you're going to have, is a considerable improvement on the other one. However, we also recommended that indeed there shouldn't be transaction taxes as such, that ideally should be based on value of property. And there's been no move towards that I'm aware of. So I would struggle to think of changes that have been made in the British tax system that really come out of this. But it does seem to me that, for example, in recent Australian tax reform, where it's true, it passed through several stages of discussion, and the initial proposals would have been to have a really quite wide-ranging tax on land and resources and so on, which was certainly something we were recommending. And they had a tax commission of their own, which was making essentially the same recommendation, and I find it hard to know exactly what was the chronology of these things, but I think we had some influence on that.
Thank you.
Okay, Michael to the floor from John.
Thanks, Convener. Sir James, you say in paragraph 3 of your submission that you identify that the bill is explicitly there to create an agency to collect 2 taxes. Later on in that paragraph, you point out that there could be more devolved taxation or even independence, bringing all of the taxation here. Does the bill, in your view, only cover the 2 taxes that we're referring to, or is the framework established by the bill sufficient to cope with additional taxes coming forward, or will there be a requirement for more primary legislation to take account of new taxation?
Yeah, of course, the 2 devolved taxes are mentioned several specific points, but in the main, I think it is much more general than that, and almost everything, things like the penalties, the period of time for which you've got to keep information, almost everything there is really quite general. Things like the structure of membership of Revenue Scotland, and how many people will be doing it, appointing a chief executive who is not a member of Revenue Scotland itself, but the executive staff. I mean, these are all powerful general arrangements, which are certainly not at all restricted to the 2. So actually, I find it quite difficult to recollect anything in the law that is really very specific to these two taxes.
So there's nothing that could go further down the line that would require us to go back and revisit how Revenue Scotland would operate?
That's a hard one to insist on. Okay, you pose an interesting conundrum.
It might be
But
useful.
that was the one I kept thinking of course, was income tax, which actually you could very quickly come into it, and it did seem to me that it covered almost everything there. The only thing I would pick out, and it really is a very small thing, is that there was naturally not a lot of attention to the exact way in which tax return forms would be done and how it would be handled through computer, for example. Although the intention is very clear, particularly in the background memorandum for the bill, that these things should be carefully worked out. Of course, there's no reason to say very much about that when you're looking at only two very simple taxes.
Yeah. In paragraph 4 of your submission, again, you point out that it just wouldn't be, viable to predict or to set tax rates 10 years in advance. But during our consideration of especially the land and building transaction tax, there was a bit of a debate about how far in advance commercial entities would require to know what tax rates were going to be, because they have investment decisions to make, commercial decisions to make. So 10 years is obviously far too far ahead. What would be a reasonable timescale to even give indicative tax rate figures if you were looking at these the two bills, the two pieces of tax that are covered by the current proposal?
Well, one Parliament can't commit the next Parliament, which I suppose even in Scotland might be a different party in power. I find it very hard to see. I mean, these things have been discussed by tax people. I remember Professor Marty Feldstein arguing that people should be legislating taxation and savings, for example, long in advance. And you can see it in a related area of state pensions. That one of the arguments against a state system of pension, which I don't agree with, but it has been argued that it's very difficult for governments to make commitments which are really effective commitments. And indeed, there have been many examples where people aren't going to get the pensions they had expected. It's clearly very desirable that one should be able to make something in the nature of a sensible promise. What I thought, certainly US legislation has sometimes legislated quite far in advance, order of 10 years on taxes, that everyone were to think not so much of the tax rate in the pension context, for example, that there should be as much of a commitment as possible to saying that the pension rate, or the basic pension rate, for example, should be a certain proportion of the then average wage rate in the country, because that then gets around the problem that commitments may not make a lot of sense when circumstances change and the economy doesn't do as well as it should have, and we've had a lot of experience of that. So I think it may be better to think in terms of fixing certain proportions, which is sort of automatic with tax rates. But I do think that with the major tax rates like income tax and VAT, that it really doesn't make sense to think of fixing the rate except for the next year. And that we have to rely on an element of social contract that says it's not, nobody is going to suddenly abolish it the following year. Small changes could be made. And really that's the difficulty. You don't want to rule out small changes, but you don't want things to change so rapidly that people are simply unable to make sensible plans.
Thanks, Rita.
John, to be followed by Jean.
Thanks very much. Good to have you at the committee, Professor. Could you just clarify for us, you made a statement in paragraph 8 in your paper when Adam Smith suggested that taxes should be proportionate to ability to pay. I doubt that he thought that meant proportional. Now, some of us have a greater or lesser control of the English language. Can you just clarify what the differences are in there between proportionate and proportional and so on?
I've always understood proportionate, which is a rather old-fashioned term, to be vaguer.
Right.
Let's say related to.
Okay.
Was my interpretation of the term. I wouldn't claim to be a great lexicographer, so I'm not sure.
Right. So proportional would be more definite. And
yes,
like,
definite proportion.
For example, VAT, 20% of everything is proportional. Right. But you could also say income tax is proportionate because it's related to the.
Yes.
So that would be the key kind of thing. Right?
That's what I had in mind.
Okay, that's helpful. Thanks very much. I mean, the points come up once or twice, and certainly just did in your answer to Mr. McMahon about the pace of change and well, I suppose whether change is possible. You said that we could make little changes, but also, I mean, some of your suggestions in your review are quite radical, really, and major. And you make the point, I think, that Australia, you said, has not largely implemented some of these changes, but New Zealand has. I mean, is it the case that we have to say, well, we have to take a very long-term approach to these things? I mean, we're talking 50 years or what to really change the whole tax system?
By the way, I'm certainly not against big changes from time to time, but they should be well heralded, of course. No, 50 years is much too long, clearly. In many ways, I think 10 years is what one might aspire to, of creating a program. But and I can easily think of examples of tax legislation that bring in a completely new arrangement. It's sort of part of the tax and benefit system, the system of student loans subsidised, which was brought in, and it was, of course, brought in quite a large element straight away. And that's perfectly reasonable because quite often for certain kinds of taxes it wouldn't make sense to do it small and gradually build up. But that certainly, of course, created a great deal of, or shall we say, it confounded people's expectations of what they would want to do for their children, what saving they might want to do. Suddenly to find that there were no longer student grants in the UK. Of course, I don't refer to Scotland in this case. But, and a big change like that, although it's something that certainly I have no objection to as such, but it does confound people rather seriously. And of course, in areas like the taxation of land and property, bringing in changes, big changes there, can, in a sense, have a very big effect, because land may lose a lot of value, property may lose a lot of value if you introduce a new tax or a new way of taxing things. And this is one of the things that puzzled us with in the tax review that we were talking about, as to what should one really recommend about the present very unreasonable system of local taxation based on property, with tranches and a remarkably low top. It's clear one wants to make a change, but the change is pretty much bound to involve enormous changes in the values of the more valuable properties.
Do you think it would be necessary then to have cross-party agreement for radical changes in the tax system like that, or do you think it could be imposed by just one government that's there for 4 or 5 years?
Well, that particular example say that you could just change the legislation straight away and say that you were going to have to tax proportionally to the value of property. But of course, if it were going to be changed back again, then in many ways there's not much point in doing it. So I think that's...
yes, because you made the point earlier
That's
that...
an interesting suggestion. I was trying to think of examples. Has it ever happened?
Yes, because in one sense you made the point right at the beginning that changes between parties often are not very radical. It's 1 or 2% or 5% or that kind of thing.
Yeah. But from time to time you get cases where one government says it's going to introduce such and such a tax, and the opposition says we'll repeal it as soon as we come back in. An issue you can see in terms of healthcare in the United States.
In your main report, there's a fascinating table which on the left-hand side says a good tax system, and on the right-hand side says the current UK tax system. And the top item says a good tax system has a progressive income tax with a transparent and coherent rate structure, and the current UK tax system is an opaque jumble of different effective rates as a result of tapered allowances and a separate national insurance system. Which I think is quite scathing. Given that that's built up over years and years and years, I mean, one of the things I would really, really like to do, and I believe John Swinney would like to do, is have a simple tax system. Whatever taxes we're doing, make it simpler. I mean, do you think that is really possible?
Of course, there are some countries that, from time to time, like Estonia, try to do this. They seem to have had a lot of difficulty in hanging on to it. The main difficulty, I think, is in the relationship between the tax system and what we call the national insurance system. And what we would ideally like be something like a fixed basic subsidy for everybody, which is kind of equivalent to what's happening by having the tax-free allowance as part of the income tax schedule, and then various other allowances like housing allowance and so on. So when you look at the total effect of the whole British tax and insurance legislation, you get a rather complicated-looking graph that shows what it's like. That's what you're referring to. That could, of course, be made a nice straight line system or something a bit like that, which would be simple. That wouldn't necessarily mean that it would be administratively as simple as that sounds. because the way in which various national insurance things are paid would be on a weekly basis, for example, whereas, of course, income tax is determined on an annual basis, effectively, although you have PAYE at whatever is the pay frequency of your employment. But that's just the same thing week after week. Whereas, of course, with welfare benefits, housing benefits, whatever, that has to be checked more frequently, disability and all of that. So in some ways you can't quite get away from that. And to be honest, I think we slightly overstated in that table, because when we were doing that, we kind of ignored what in practice is really quite an important area, the whole area of disability benefits, which I think cannot really be administered very easily. I mean, very simply. So I think it turns out there are lots of areas where you're going to have to, it's not simple to get a lot of information about people. And it's not even very simple sometimes to find out what people's income is. So while I think it's a reasonable ambition to have a nice, simple overall tax schedule, including the benefits in general, that you do have to start making exceptions, and the whole business of assessing the size of the tax base, as we call it, of income, for example. Income is not as easily defined or measured as you might think.
I mean, you specifically mentioned national insurance there. I mean, is there any logic at all for PAYE or income tax and national insurance being separate, or should they just be combined?
I think that the logic is what I mentioned, that one is essentially on a weekly basis.
But the actual payment
of it... The other
of
is determined, but the actual payment...
I mean, because we're all paying both.
Yes,
and
sure.
Wouldn't it be simpler just to have we all pay tax and forget about national insurance, pay a bit more tax?
Yes.
Yes.
Oh, no, I'm very much in favour of that. And from time to time, there have been initiatives within government. I remember Barbara Castle was trying to achieve something like that years ago. And then it came up again. I think there were Conservative plans to try to simplify it that way. And so far, it has always collapsed. Why, we wonder. Yes, very.
Yes, I suspect people don't like the idea of 10% more income tax, even if they paid no national insurance.
Yeah, but it's even more complicated than you said, because
Yes.
of the tax credit system put on top of the other one.
I mean, the present system, do you think it is a disincentive to work at some stages because of this, as you say, it's not a smooth line? And are people being discouraged from work just because of the way the system works?
Oh, that was something on which the different members of our group that were writing the tax review had remarkably different views. I happen to think that it's not that well established that people in the lower income range, which is where this is a big effect in theory, where there are income ranges over which effectively the marginal tax rate is about 100%. And indeed, I've come across cases where, because of the particular rules about unemployment benefit or disability benefit, that people would lose by going out to work. And it's hard to believe that doesn't have some effects. But yet, just anecdotally, of course, I've found that partly because people like to do a certain amount of work, that they're not necessarily discouraged all that much. It comes down to what is one of those fundamental empirical issues, very hard to settle. to what extent are people not working because there aren't jobs they can get, and to what extent are they not working because they really don't want to, and they avoid it. It's very hard to establish that in particular cases. But I think the reason why I don't believe that these incentive effects are all that strong is because you see such big changes in the level of employment over relatively few months, even in places like Spain, Greece, in recent times, and even in parts of Britain.
Okay, I mean, I think my final point then, I mean, on this area, you just mentioned other countries, and you said Estonia earlier on had tried to make their system more simple. I mean, compared to the UK, do you think there are other countries with a simpler system, or do most countries have a more complex system, or how do you see us, UK, fitting in the world stage?
Well, Hong Kong has a much simpler system. It gets the simplicity at the expense of some very odd features. Like the income tax system, it's not a strictly proportional tax system, but it's only a salary tax. In other words, they only tax the parts of income that can be easily reported. Furthermore, for the higher incomes, there's a 15% maximum. So it's all quite low. And they also have a uniform profit tax. And also some simple property taxes. It's all made possible because the government owns the land. And this is a great time. It also has enormous reserves that have been stored up. So it's easier to be simple when you do that. But on the other hand, there are large amounts of income that simply don't get taxed. If they needed it, they would have to do something about that. So other countries don't have that situation.
Okay, that's great. Thanks so much.
Okay, Jean, followed by Malcolm.
Thank you. Thank you, Convener. Just a couple of statements in the review. One is you say to improve the quality of debate on tax and help people think coherently. That will lead to some improvement in policy. How does that manifest itself? Whose debate? I mean, I'm interested in the idea that's in the review too about clarity about tax and kind of, you know, for want of a better term, lay people like us understanding the tax system and actually having, maybe there'll never be a day when people are happy to pay their taxes, but at least they might understand better the system that's devised and the outcome of that. And we go on, the other quote that I wanted to ask you about was, we need to get better at the very tough job of quantifying the welfare gains to be had from reform. And that they seem to be related, I think, these statements.
Yes. Now, the first of them, you can see that if people can understand the arguments for saying, instead of, for example, having zero VAT on certain kinds of foods, that if you, almost everybody agrees that you want to do some redistribution, that the obvious thing to do is to base that on how well off people are. You would think, well, this is the kind of thing that once discussed, people would begin to see that there really wasn't a reason for treating food differently from, shall we say, expensive wine. Although at first they might think that doesn't make sense. Obviously, we should be taxing luxuries more highly. So there are some kind of paradoxical things like that where I think that the argument can be widely understood, and it'll no doubt take a little while. So I think that one would probably work. But then when it comes to the quantifying welfare gains, that's something our students have a lot of trouble with. So I think that people at large are going to be a bit puzzled. We can produce numbers, and we've tried to do that in the review. But I suppose there we're relying on people believing that we've done a good job, rather than understanding exactly what the argument is. So it's a different kind of thing of saying, look, if you make that change, we claim that it'd be worth so many millions of pounds from the gain deficiency. I think we're just hoping that the perhaps slightly spurious precision of the number will at least tell people what's at stake. And that's not the same as persuading them of the validity of the argument. So there are two different things, both of which I think are important to do. That's to say, you shouldn't expect people to happily accept some tax change if they haven't been given some estimate of essentially what's the gain and some indication of who's gaining and who's losing.
Okay, thank you.
Okay, Jean?
Yes.
Malcolm?
The tradition of such parliament to have general principles and bills, unlike Westminster, and I noticed that you suggested that a proportionality principle could have been inserted in the bill, and there could also have been a principle of continuity. I mean, were those kind of have recommendations, or were they just, were you just kind of talking theoretically, as it were?
I kind of felt that I wasn't sure whether people with a much better judgment of what is influential in legislation would really work. It's, I mean, bringing in principles like that is a little bit like what you do when you establish a constitution. And that hasn't always been the British way of doing things. So it wasn't an issue. You might not accept that these were good and sensible principles to have. Also, it may be that you couldn't quite see the point of creating a constraint on future legislation, or on. But it struck me in the context of this particular bill, because it has this striking difference between what is in the bill and what would be in regulations. So then it seemed to make more sense to have some kind of constraint on what kind of tax rates could be proposed, what kinds of tax schedules could be proposed. And there's absolutely no indication, of course, in this case, rather the contrary, that the tax rates would not conform to principles like that. I think I could probably dream up some other general principles of the same character, but I kind of thought, I'm not sure this sounds very attractive to most people who are responsible for legislation. So
well, as I say, we have got quite a lot of precedents for principles, but I just wondered whether it would actually rule out some taxes per se, or whether, but also there's the whole question of ambiguity, because we've already dealt with the issue of proportionate and proportional. So I just wondered to what extent it would be viable, really.
Yeah. Well, since of course there are UK taxes, which these transaction taxes are leading examples where you don't have continuity. It was that made me think that if one can rule out some unfortunate things, then fine. No, maybe it's not so easy to think of other clear examples. And of course, one of these is much weaker and therefore much more acceptable continuity than the other.
Okay, thank you. Taxing property transactions, well, we know from your review that you don't like taxing property transactions, and you say it's a source of inefficiency, but there is little the Scottish Government or Parliament can do about it since they have been given so few tax powers. But I think in your review you also suggest, I may be getting this from somewhere else, but I think it was from your review that you could reform business rates and LBBT on business property through a land value tax. So would that be a viable way of, we would have the powers within Scotland to make that kind of change, and could that potentially be revenue neutral?
I think there's a lot to be said for that. I don't actually know how what powers are available on that. But it could be revenue neutral, but it needn't be.
Because that's right, from your review, you're quite keen on a land value tax, is that right?
Yes, yes. I have some concerns about a land value tax. But, it's a more subtle thing than it seems at first. I mean, this is an old idea and it sounds as though, on general economic principles, this is grand, that a land value tax, in some sense, doesn't have any adverse incentive effects. People aren't going to throw land away or fail to create it because of that. Then you get into realizing that because of the effect of government regulations and permissions, I mean local as well as central, that the value of land can be greatly changed. Development value is a well-known concept, and that really getting it down to pure, simple land value is not that straightforward. However, the real concern, which in the end I thought one should not be too concerned about, is that a land value tax, if you introduce it, has widely different effects on different people. And what it's doing is taxing those people who happen to have a lot of their wealth in land. And it's not doing anything to those people who happen to have the wealth in other things, stocks and shares of the bank. Now, if all these people are pretty rich anyway, you might say, well, but still, we're doing some good. We're taxing the rich, and that's what we wanted to do, and that we're missing some of the rich. But it has that rather inequitable aspect, that very different effect on different people, who, in other respects, you would think you wanted to tax to the same extent. So there's still a feeling that a more general wealth tax would be better.
Okay, thanks. You say, paragraph 6, the American requirement that the Internal Revenue Service state how much time they estimate it will take to complete the tax return on average seems an example that could, with advantage, be copied. Again, are you suggesting that there should be some general reference to that principle in the bill, or is that just something you think administratively would be quite a good idea?
Yeah, I think it is a good idea to. It's a small point, but it's a good idea to require the Revenue Scotland to estimate how much time would be involved in taxpayers conforming to the requirements of legislation.
And if I could go back to something that you touched on right at the beginning, on the general anti-avoidance principle, and your concern about paragraph 58 and the words about obtaining a tax advantage is the main purpose, or one of the main purposes of the arrangement. I wonder how that compared with the general anti-avoidance in UK legislation. I mean, is that presumably there isn't a similar reference, or is it just omitted, or do they say something else that's a better formulation?
I think it's only. I don't have it immediately here, but I think it's only the main purpose, and also it has to be, in some sense, abusive. I've forgotten the exact.
Right. So,
word.
right.
Yeah.
So it's one
So
of
it's
the
quite
main,
a lot weaker.
It's one of the main purposes that you're mainly concerned about. The words about one of the main.
Yes, it's only that.
Yeah. Okay, fair enough. I mean, I suppose my final question in that sense would be, I mean, it's rather a general question, but to what extent do you feel this bill is reflecting UK arrangements, or to what extent do you think it is significantly different?
Oh, I think in that respect it's significantly different. The anti-avoidance.
But in other respects,
it's distinctive and
but
strong.
Speaking more generally.
It seemed to me very like the arrangements. In many ways, it's presented somewhat more smoothly. So this is the advantage of coming later.
Thank you.
Thank you. Just a couple of very brief ones. Do you have a view on the board structure that a tax authority should have? Are there any sort of general principles in terms of having a mixture of execs and non-execs, for example, or having all non-execs and then the chief exec report separately to the board? Are there any kind of general principles around that you would put in front of us?
Oh, I thought about it. I thought I really didn't know. I mean, it seemed perfectly sensible and set out, but to me, other arrangements would have sounded sensible too. Sorry, I just feel this is an area where I don't have enough expertise to be able to give sensible recommendations.
Sure. Okay, no, fine. And just the other one I wanted to ask, the concept of advance clearance has been raised with the committee in various discussions, the idea that the tax authority can speak to parties in advance of a transaction taking place and effectively clearing them, say
yes.
it wouldn't be subject to tax, for example. I guess there are sort of three broad ways of doing it, or three broad approaches. One is you just say we don't have a system of advance clearance at all. One is a system where there are informal discussions between the tax authority and the parties, and there's a non-binding steer, if you like. And then I guess the third example we're shown is one where there's a formal discussion between the tax authority and the parties, and a binding agreement or clearance is given in advance of the transaction. Again, just I wonder, do you have any views on any of those three, or any sort of principles about advance clearance?
Since I think that quite often the particular instance needs to be thought about. I mean, you can have tax avoidance schemes, or you can have the issue whether a particular set of transactions would be held to violate, would be an example of tax avoidance that would change the tax calculation. And I think that a lot of the cases would be like that. I mean, in other words, I think you would, and it's implied by that, that you could be giving a steer that in initial discussions, without any commitment to approve what is finally done. Because I would have thought that, as with many legal cases, the exact circumstances might turn out to be quite important. In other words, it's the middle one of your three that makes sense to me.
Okay, great. Thank you. Thanks, Hubert.
But by the way, there's a bit violate certainty. So I can see why there's a case for the other. But on balance, that's where I go.
Okay, thank you. That's concluded questions from the committee. Professor, are there any further points you wish to make at this stage before we conclude finally?
No, that was a very interesting set of thoughts and questions. Thank you very much for treating me so well.
Quite a gentle bunch we've got here, actually. No, well, thank you very much, actually, for coming along this morning. It's very much appreciated, and certainly that will help us towards our deliberations on this bill. So, that being the end of the public session, I'm now going to call a brief recess to enable the public and the official report to leave before we go into private session.